All right, welcome in everyone. Got to let YouTube catch up to live, I guess, on the live stream side of things. Hope everyone's having a good Wednesday, and thank you for joining us on our first September edition of the AI Circle, brought to you by all of us at iFlip. Looks like there's only a couple people. Looks like someone already in the chat. Just double checking. Let me know in the chat if you guys are having any technical difficulties. It's very unusual for only a couple people to be in here already, but could just be a slow day, and that's all right as well. Um, just reading the questions. Different AM models. Wow, got a good one. We'll bring Kelly in here in a second. We already have a good question, so awesome. We're starting off the Q&A with a bang. Let's welcome in Mr. Kelly Korshak. Kelly, how you doing today?
I'm doing well, Lee. How are you? How is everybody out there in podcast land?
Hope they're doing well, because there's not many of us on today, and that's all right.
Hello to you, sparse few.
Thank you, Jim. Good to see you as always, Jim. Gosh, question all the way into AI and models and stuff. You're gonna have a fun one with that, Kelly. So, may as well get the disclaimer out of the way before we get into anything. Anyone who's just joining us for the first time, I'll kind of go through the agenda here. Give me 1 second. We'll get back to that. So, as always, I have to remind people, if you guys are still getting the identity verification pop up in the app, please fill that out. If you have any questions on if you're good to go, if your account's already migrated, you are good to go. But if you have any questions, reach out to me or our support team or anyone that you've been contacted by before. But for the new folks, we're going to do a market update, maybe 15 or so minutes worth. We don't really haven't been making a ton of trades, so that segment's been a little shorter lately. And then part of the reason why I think a lot of people are here is to get some questions answered, whether it be about iFlip, our smart folios, our AI, or just maybe trying to stump Kelly. So with all that being said, the Q&A is your gateway to potentially being an Amazon gift card winner tonight, and that's rewarded for the person who asked the best question. So before I let Kelly get on his way, we got to do this fun disclaimer. So iFlip Investor Inc. and iFlip Financial Services are not financial advisors and do not make, buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk, and you should speak with your CPA or financial representative to ensure the iFlip smart folios you select are suitable for your investment profile before trading in a live brokerage account. With all that out of the way, Kelly, any words to start out, or you want to jump right into the market update?
I think we should probably just go into the market update. I mean, there's not, outside of last night's political debate, which may have expressed itself this morning and the whole entire day in terms of the volatility of the market. I think when we look at the market, I think we'll kind of get what probably happened in the debate. It's interesting how that works.
Yeah, it's a weird day in the market.
Well, it is, and it's also a weird day in the market. It's really, today was hard for me to get my arms around. Obviously, we woke up in the morning. Here, I'm going to put up the Dow Jones because that's the best one to probably look at in this case. And as you can see today, this final bar over here on the screen, we were down vastly, almost 700 points. Soon after the opening was down just 100 or so. We slid quickly down so almost 700 points, and then ultimately had almost an 825 point rally to close up on the day. So we think about, what created the initial sell and then what created the later afternoon buying. Generally, when something like that occurs, it is because of some interpretation of the news from the previous day. And the only thing I can really see, other than any financial data, which I wasn't aware of today, that came out, was the debate. And as we also saw, Lee mentioned earlier, and I don't follow it, it's Truth Social, of course, got hurt again today. But the way I can maybe interpret it through the market is through the Dow at least, and also the NASDAQ, is that the idea of Trump being president is probably more bullish for the market. Trump didn't really lose the debate last night, but he definitely stumbled under the inside of the debate, at the very least, without pushing the menu of things that he should push. Kamala Harris ultimately stayed steady. And so what you can say is that the market, of course, probably sold off thinking, oh, this is bad, Trump is in trouble. And so the market should go down because Harris will get elected. Then ultimately people realize, wait a minute, that in itself is not enough. And then the buying started to come in slowly at first, but it gathered momentum throughout the day. I've seen this many times before. I don't believe, if you look over here on the right side, I'll make these bars a little bigger. On the right side of the screen, this low that we had here on the candlestick, if you look at a candlestick chart, is something that we probably might very likely see again, especially if we look at it in the context of the S&P. This kind of formation to me is generally a bullish formation with follow-through buying tomorrow and possibly even Friday. But look at the NASDAQ. This is the high formed in the NASDAQ in July. We had the big slide down to a 200-day moving average here. It bounced, came up, but we came nowhere near a new high. There's the old high. Here's that high. Then we started to falter again, and then we had this rally. To me, the market looks bifurcated. It's pretty clear. This market was up 2% in the stock. The Dow was only up 30 basis points. So much different there. The S&P was up 1%, but the S&P is dominated by the NASDAQ. So essentially the S&P and the NASDAQ kind of go hand in hand these days. This kind of formation, I agree, is a very bullish one. I would probably, during the day, I was looking at maybe buying the S&P futures if that was a possibility to me, but the day got ahead of itself and I just didn't do it. And I would be expecting a small follow through at least for tomorrow, but we will see. In general, though, the market does appear to be weakening despite today's late afternoon rally. We did post new lows in most all the markets except for the NASDAQ. We made a new low in the Dow today. S&P actually hit the old low right here from the other day. So we will see where the market goes from here. My instinct is a little higher tomorrow, but then back down. Look at the Mag 7, though. Again, we'll just quickly go through them. The Mag 7, Apple is not far from its high, but it's not. The Dow made a new high here at this same area that Apple made this high, not a new high. Google is definitely faltering. It may have rallied today, but this does not look like a good stock to me. This looks like a stock that's going lower. If you look at Meta, it's near its highs, but again, we're struggling and there's nothing exciting in this chart pattern. This, to me, looks like a descending pennant. Again, I'm talking technical analysis, not machine learning or even algorithmic trading. Amazon had a good day, but again, still far off its highs. Microsoft, far off its highs. Good day, but we will see. Netflix, again, descending pennant. I actually own the 640 puts. Got hurt a little bit today. It's doing good in the morning, but that got erased. And NVIDIA had a great day, up $8. I'm not a buyer of NVIDIA at the moment. I think it's an overpriced stock, so I will not be an owner of NVIDIA. I'd be in a straddle or a strangle here, or marginally in the market and selling calls. Our systems are long, however, and as long as the systems are long and AI models are telling us to be in, we are in. And by the way, we're in all of these stocks. Apple, I think we're starting to falter though. And the same thing is true of, Google. We're out of the market here. So again, if we look at the oil stocks, let's look at oil itself, the price. We are well below $70 a barrel, $67 a barrel. That being the case, that oil is getting cheaper is a good thing. But we look at the actual stocks. Here's Exxon. Exxon's high back here is about 120 a share. It's at 110 a share. It's only $10 off its high. That's literally 8% off its high. But oil itself, as you can see, is way off of its highs. So its highs were 86. We're now at 67. We're $20 lower. We're 25% off our highs in in oil. But why are Exxon and all these other stocks, like the pipelines, right near their highs? Look at these. These are the two pipelines. This one's a little, Plains All American, a little further, but Energy Transfer, again, very close to its highs, paying great dividends. It's hard to figure that out, but we are long these markets still. If we go over here, look at JP Morgan. Had a terrible day the other day. So, of course, we all heard Goldman Sachs, same thing, terrible days. Why? Trading revenue was expected lower. You can see there's many alerts out there. And the reason is because if interest rates go down, it squeezes margins, harder to make money in the trading side. I'm very, very, very accustomed to this because that's how we got bonuses, is if the interest rates were going down, bonuses were less likely because trading revenue is going to go down and you need to make money trading in order to get a bonus. So again, I like the banks in general, although I'm a little nervous because we're going to get an interest rate cut of some kind. And we should go right back and look at the 10-year note. Here it is. And guess what? We are right at a new high. New highs mean lower interest rates. So where do we go from here? I don't know. But you can expect Fed funds to come down at least 25 basis points, if not 50. What does that mean? Those are generally things the stock market likes. However, I just think we're so late in the cycle. I think the resumption of a rally to new highs will be muted and it'll be more of a struggle than it was before, despite how much Americans are in love with the stock market. An article in the Wall Street Journal the other day. I believe it was the Wall Street Journal. Let's switch over to a couple of oddball stocks that I like to watch. Again, AT&T has been the real surprise here. I mean, this is a real boring company, right, everyone? I think, but when you look at that chart, that doesn't look boring. If I skew it out, though, it looks pretty darn good, doesn't it? I mean, we are now approaching the highs pre-COVID. Why? I mean, what a boring company. What's happening is the divestiture of DirecTV, and that is a good thing for this stock. This stock was paying 6.7% when we were down at 18. Now it's paying a little less, but look at the price appreciation we've had in AT&T. Somewhere in here might form a bit of a high. I just don't know where AT&T can really go from here historically. But telecoms, regardless of the economy, generally will do well when interest rates come down. And for the most part, we're close to full employment. Verizon is another one, but it hasn't participated quite as good as AT&T. But again, it's still paying a very high dividend. And these are stocks, this is the stock that I would expect to own and appreciate a little further, maybe all the way up to $49 or $50 a share. We're at 43 or 44 now. And the reason, again, it's a telecom. These are boring businesses, but they really can tend to look good during times like this, where we have a lowering interest rate environment, inflation, even though the numbers are lower, the embedded price appreciation is there. There's room here in Verizon and maybe a little room left in AT&T to go higher and own a dividend. Either way, these are good, safe dividend plays. By the way, they are in AT&T and Verizon are in the conservative portfolio. They are in the 60-40 portfolio. I think AT&T is in the balanced portfolio, but some of these stocks have been really good winners for us in almost all of our AI-driven portfolios, especially because of their dividends that help us underneath. Finally, I guess we should look at Bitcoin. Let's look at that in terms of the EBIT. Well, not doing so well. This has been a struggle. I really was hoping that during the summer we could make new highs. We didn't. I've been told by many a person that the summer is never generally good for Bitcoin. But as long as the stock market is good, Bitcoin should be. And right now, the stock market is actually advanced above Bitcoin. Normally, stock market appreciation bodes well for Bitcoin. So if the stock market can hang on up here, maybe make some new highs, I would expect a strong rally from this. But I am just talking my book because ultimately I do like this. I want it to go up. I own it myself. So I have a vested interest. I shouldn't be I'm not making a call, but that would be my expectation if the stock market can hang in there, especially with lower rates. It's less, you have less draw against your capital if you can't make money somewhere else, because you don't make any money by holding Bitcoin unless Bitcoin is appreciating. So it's a pretty light Wednesday, this particular AI circle, and I guess we can get to our questions earlier than normal.
Perfect. There's a lot of them, actually. Let's see if there are any. I know there was a handful from one person. Jim asked, I don't want to speak for you, Kelly. I think it's TradingView, but he asked, what program are you using to show the charts here?
It is. I like TradingView for charting.
Yeah.
The Flip software is not meant for charting stocks. So I do use TradingView. I think TradingView does a great job of displaying things. It's cheap. It's easy. It's a portal so that no matter where you go, you can get onto it. So there's the same advantages as Flip. They have an app. You can even trade on it. You can't do what you do on Flip, but for just showing people the nature of the market, TradingView, I think, is a very, very good product.
They have a free version too, right? Where you can just kind of look at charts. I guess you could do that on Yahoo Finance or something.
Mine is free, but I just added real-time pricing to it.
Got it.
So same thing. You just pay for your quotes.
Perfect. I'm going to jump around a little bit in here, but Andrea said, with Google dropping, would you consider puts?
Yeah, I think I would. And I've done that actually I have considered puts in that, and also in I think I mentioned earlier, I own let me see it, the Netflix 640 put. Yeah, I don't like the formation of these stocks currently. So yes, I like this one here for 640. I might be wrong. I'm willing to lose the money. I think, this is October. Remember, everyone, it is October. September. And September is generally the worst month for the stock market. So there's no real reason for me to be optimistic, even though we've been down most of this month because of today's rally. I'm not optimistic in this month under these circumstances going into an election to be long this month. So yeah, I do own actually naked puts on, in my case, Netflix. And if I was looking at Google as well, here, I hate to tell you folks, I think Google is possible to go all the way down to 135. Keep in mind, for such a great stock, it's at 190. They're going to try to separate it. It's already lost $40 out of 190. That's, I don't need to tell you, that's over 20%. It's a 22% price discount. And it's one of the Mag 7s that is just not performing well. Matter of fact, the Mag 7 is definitely underperforming lately.
Got it. All right, we're going to get in some more technical AI type questions. So, and I believe this is from Adrian. Correct me if I'm wrong, AO French. I thought that I remembered that was your name, but I'm sorry if I said it wrong or I thought your name was something else. But they said, can you explain how the iFlip AI stock investment app integrates different AI models such as machine learning, deep learning, and natural language processing?
I read that question. Yeah, no natural language processing. We don't do that. That's something more for GBTC. Sorry, what is it? What is the one that escapes me right now? For the Chat GBT, sorry, type of thing where you use natural language processing to be able to try to understand things. No, we do none of that. Let me be straightforward on this one. AI is used in the markets, in the stock market. There are many models I can use. There are many models that you can download for free for example, in Python or other languages that you can literally put right into a front end and code it in, and then establish what predictors you want to give to it to be able to drive whatever kind of AI model you want. They have some AI models that you can download and use, actually incorporate various models inside of it. So there's linear models, polynomial models, Bayesian models, even a linear model. There's so many different kinds. I started in this industry with a Bayesian model. Remember, this is a product that has evolved from neural networks. Neural networks came first, and the extension of that really is a machine learning algorithms. But the closest thing that I feel is to the neural networks, which I first worked with, are the Bayesian models. And they seem to be the most adroit at capturing the volatility in the time series. Let's just leave it at that. The time series of a stock or a bond or a future. So the Bayesian models are what we use, and we're focused on that. Now, I am exploring into different large models, but the Bayesian model is the one I use. And if you think about what the Bayesian model is, internally, what we're doing is creating statistics within whatever data we feed, other time series data that we feed it. So as we feed it various different time series to say, are these time series relevant to the ability to predict future price, which is just another time series? How do we do that, and what is the best model for it? I have found that the linear polynomial models are meaningless. They offer no value to me. They show that there's no value to any variable I might throw in, and almost no value to any of the data, to the time series that I feed alongside with price to say, hey, they have a chance for predictability of future price. And by the way, that's no matter how I scale it or walk it over whatever amounts of time, 10 days, 30 days, 45, 120, doesn't matter, they don't work. In other words, I get no predictability. However, with Bayesian models, we do. And I'm not shocked at that because, again, I kind of feel they're the closest thing to the way the original neural networks worked. And some of them, although I didn't have success with the neural network models, I've been told by others anecdotally that there has been some success in some currency time series predicting them with the neural networks. But honestly, I think the neural networks are old and they've all been replaced by the machine learning aspects, which are now plentiful, and we can get online. We can run up in the cloud and attach NVIDIA type servers to be able to capture the data and run them fast. So to answer that question, finally, I guess because it was 3 parts, I'm looking for it. I'll just leave it at, we use a Bayesian model generally to make our predictions, but I'm exploring other models, like a large models, to see if we can find and glean data out of that. I'm also exploring the granularity of some of these models as well. Keep in mind, granularity matters because at a very fine level, although it takes so many more, actually exponentially more computer cycles to run them, it just becomes expensive to get the data. And I don't know how much value that's going to give me in terms of an investor that is trying to essentially hold on to stocks for a longer period of time and not trade them. Remember, the more granular we get, the more likely we can have alternating signals, which means we start to trade a lot. And once we start to trade a lot, frankly, the markets would eat up any of what we think is a good trade from the model in terms of not commissions, but just execution pricing. It generally will eat up profits. So those are not interesting to me in the context of a flip, a person with flip on using flip as their management system for their monies.
Perfect.
It's an answer.
Sorry. This next one, talking about inflation. Basically, do you feel the odds of a big rate cut have decreased based on the slight decrease in consumer prices on the latest report?
Would you need to speculate about the Fed's upcoming interest rate? Do you think feel odds of rate big? In other words, should we go 25 basis points or 50? I think is what the question is.
I guess a big rate cut could be dependent. You could.
A big rate cut would be 50. They will not go more than 50. The question is, maybe inflation has been solved, but what has not been solved is the price appreciation underneath it. So here's what I'm expecting. I'm expecting 25 basis points. And if we get that, I think the market will actually do better. The stock market will, because they're going to say, well, where's the other 25? And as long as the market is thinking there's more to come, in other words, the Fed will give you more, they will buy stocks waiting for the Fed to give you more, because underneath them, their support is, well, the Fed's going to cut again. If the Fed cuts 50, that could scare investors thinking, okay, we'll get a big rally at first, but wait a minute, why did they cut so much? Are they worried about this economy? And they very well should be. But I'm expecting 25%, 25 basis points. And by the way, recently I saw Fed funds futures had literally a 37% chance that it would be 50 basis points. So that means there's a 67% chance at least for 25 basis points. So I'll go with the odds, 25 basis points.
Perfect. I'll take this next one. This person said, I have a Schwab account with $2,000 invested. I want to switch it over to iFlip. Any suggestions to make it easy? Honestly, this is something that probably happens every single day with our customers moving money, whether it's from Schwab, whether it's from somewhere else, whether it's from their bank. It is very easy. If you need any help, let me put in the bottom of the screen here. Reach out to Mailbag and just say you need help with moving things over from Schwab. I'm happy to help you. So is anyone on our team, really. It's something that it won't be hard for you, I promise, but we'd be happy to have you.
Yes. And it is easy to move.
Yeah, very. Joe, when will the completion link between iFlip and IRA Club be completed? I'm speculating here on the question a bit. For those, well, I think most people probably know, but if you have an individual account or retirement account, that's already over at Apex. We're kind of in limbo right now and moving our self-directed accounts. It's been pushed back a week. It should be very soon. So like Joe, if you're trying to fund your account right now and you've been told to wait a week, that is accurate information. We'll be able to set you up here pretty soon. And more to come. We'll let you know when everything's been completed. Anything to add to that, Kelly?
It's just frustrating.
Yep.
It's frustrating when you move from one clearing broker to another. Just so you know what the background is hooking up the APIs from Flip to the new clearing firm, Apex. Apex is a huge firm, $80 billion in assets. They have, frankly, incredible technology. And we are using their latest technology. It's called Ascend is what they call it. And their API hookups are very good, but they're also new on the Apex side. And a lot of our customers have self-directed IRAs. This is a special type of an account where the custodian is not going to be Apex. And right. So they're not used to this kind of a product on their newest platform called Ascend. Now, they do this all the time with their normal back-end software with other vendors. But Apex had a very clear message to us when we onboarded Flip, and they really wanted us to use the Ascend platform. It is what all their other customers will ultimately go to. It's just been a frustration for us to try to move these accounts, because all it takes is one little problem, one miscommunication of what that API is supposed to send over. And then if we said, let's go everyone, and we've done it, and we've of course done Q&A, the Q&A comes out and it fails. And so we have to hunt that down. So it's very important. And when we say it works, it means we've done this for a number of customers already that are test subjects, to make sure it works before we give the go ahead. It's very frustrating. We are close. We keep trying, but there's always one little thing. All it takes is one small error. And then everybody would say, well, I tried to do it and then it failed. What do I do now? We don't want people to, I'd rather everybody out there have the frustration of waiting rather than frustration of trying and then failing.
Sure. And in reality, a week's not going to make or break you over the long term of your IRA. So we appreciate your patience. We'd love it to all be behind us as well.
I appreciate the patience.
Jim was saying something, I think it was on your last chart. He was asking what's the distinction with an OTC stock. I don't remember what this is in relation to. So Jim, I'm sorry, but if you want to reiterate the question, we'd be happy to answer it. In the meantime, Adrian asked about another one. What about ANN or RNN instead of Bayesian? Back to AI.
Again, there's so many directions you can go to with machine learning, and that I think we have a pretty good product with Bayesian, and we are looking at right now more about the speed of getting more granular with our existing models than I am about exploring other models. There will be a time for some of that. But, you know, to be honest with that particular question, it's, if you ever heard the saying, it was told to me many years ago by a wiser man than me when I was very young, because I wasn't very wise when I was younger. The better is the enemy of the good. There's always probably something better. But if we have to, it depends on the amount of effort required to be a little better when we're already good. The issue that a firm like ours has, and with an investor that is designed for our product, who is a longer term investor looking to manage the risk of their portfolios, as opposed to trying to say, I want my portfolio to really turn and make money. My belief is that the 99% of the people on our platform are here to manage the risk of their retirement monies or their accounts and entity accounts, trusts, etc. Rather than saying, hey, we're going to behave like a hedge fund, and we're going to always be looking at the latest technology to make an improvement on trading models that already work, but we want them to work even better. If I was sitting at a desk nowadays at like a D.E. Shaw, I could tell you I would be looking at everything. But my job is ultimately to make money for the firm. And if I find something good that makes money, that's what they're going to pay me for. If I try to keep looking as a scientist to probably find something better than something that makes money, they're going to say, well, you know what? You're not making enough money. You're spending all your time on research. Mm-hmm. Where's the money? And then I'd be fired. So those questions are great in an academic level. And personally, I'm very interested in those things. But the responsibility of this firm is to be able to offer risk management to a wide swath of customers that are trying to hold their positions. They don't want to have income gains. They want, if they're going to have gains, they want them to be long-term capital gains. And also they have IRA accounts where if I turned them more, that's kind of irresponsible for an IRA account, right? So even though they wouldn't have the tax consequence, the deeper I go into AI, I'm not so certain that I'm going to get a better signal than I'm going to get right now with a different model. So
Yeah.
for me, the reward is marginal, but the time spent is huge. So not now.
Perfect. Jim kind of reiterated the question. I'm sure he knows what an OTC is, but maybe not. Basically just said, what's the significance of an OTC stock? Obviously it's an over the counter. It's not traded on the NASDAQ or S&P or something, but I don't know what else you might want to add
Well,
to
it's
that.
not traded on the Amex, NYSE, New York Stock Exchange, or the Nasdaq. What generally in over-the-counter stocks are, they used to be called pink sheets. Basically, stocks that are cheap, $5 or less. There's a lot of rules around those stocks. Sometimes they're even, if they're in the pennies, those are all either pink sheet, OTC. There is no significance to them other than this: they're very low capitalized companies. So, for example, if our company were to go public, it would be an OTC stock, because right now the value of our shares might be sitting around 62 cents a share. So it doesn't matter. In our market cap might be 100 million. That's small. That's just too tiny. And that's where the spillover comes. The spillover comes into OTC stocks. So if you want to be listed, believe it or not, it's not hard to go public, but you're going to go public as an OTC. And generally, OTC stocks are just not as respected as a stock that could, enter into the NASDAQ or the New York Stock Exchange. They're always cheaper, they're smaller, and we know much less about them.
Perfect. Yeah. You see some 1,000-to-1 reverse splits and things like that. Teresa had a good question related to kind of our platform. She said, do you invest in one of the portfolios, or do you have to invest into one of the portfolios, or can you choose your own stocks? I'll take it one step further. You could even do both if you wanted to. If you want to buy a stock and hold it, you're welcome to. Our AI is not going to touch it. The smart folios are what the AI manages for you. But if you want to, buy 10 shares of NVIDIA or something and just hold on to it, you can do that on the platform as well. And just because it's a good time to bring it up, smart folios have a minimum investment of 500. Obviously, you're welcome to put much more than that in them if you'd like, but that is the absolute minimum for a smart folio. Jim also had a comment on that, I think, as well. Maybe he's trying to take my job here. He said, you can pick your own stocks, but I recommend the smart folios. Couldn't have said it better myself, Jim.
I agree with that too. I see a question from Teresa. Are ADRs too risky?
Yep.
Not necessarily. An ADR is just an American depository receipt. It's an offshore stock that is allowed to trade through an ADR on the various American stock exchanges. The only risk about an ADR is, again, they're foreign companies, and generally they're larger companies. I think Alibaba, it was at one time an ADR, and look what that is. I'm not so sure I would agree they're too risky. I just take a look at the chart you see in front of you. We're looking at Google. If you notice, there's a history. The more I have a lot of history, price history. So if an ADR has a history, it may not be priced at $130 a share, but it'll have a lot of price history. It's telling you that there's an activity in the market. And if there's an activity in the market over a long period of time, that already tells you a lot about its risk. Then the risk really should be confined to the price. What you don't want to see is something that is very sporadically traded. So you want to see things that look like this, that have a daily range. Whereas if you go to a stock that has a very small daily range, you might see something like, let me show you something. It might look like one of these. Take a look here. This is it's called the Global X NASDAQ 100 covered call. So I believe in writing covered calls if you can. But if you notice, look at some of the price action. See how tiny it is? It means what's happening here is there's not a real trade every day in this stock. Some days there's a large movement. but there's not a lot of trading going on. ADRs have this tendency to look like that, where there's a lot of dots on the screen. And that's telling you they don't know how to price it. This is doing it for a different reason. There's just no volume. And then all of a sudden a buyer or a seller comes in and you get a larger range in the day. When you see a lot of that, it tells you that you may have price history, but you don't have any volume. And so my only point is, it may be something you can buy or sell. The problem is you have to put in limit orders to be able to execute in those. You got to be very careful. So I don't think they contain a little more risk than owning a regular U.S. stock. But if you know what they are, do your research on them, they're purchasable. And I've bought and sold those many times in my life.
Perfect. And then just last call for questions, and we'll pick a winner here soon. But Adrian's last point, I think, was just saying thank you for all the insight in your philosophies. Also said ANN scares me for errors. That might mean more to you than it does to me.
First of all, I'm trying to think what's the best question for today, Lee. Obviously, I like the questions on the machine learning side because I bury myself in that area most of the time because, first of all, I like this, but I really would encourage anybody that's in this space of machine learning to certainly recognize that when you find something that works and is good, yes, there's likely something better, but how much time we want to spend to get a marginal benefit really becomes an economic decision at many levels. And you can never take away the economic side in business, whereas you don't need to look at that if we're in a learning institution and we're a research organization. Then the world's your oyster. Go where your mind and your passion takes you. However, in this case, running a business, if you remember, one of the things I look at for everybody at Flip, and then I'll get to the best question, is that at any time in the future, I want to know, I don't want my portfolio to fall more than 10%. In other words, my total amount of assets. So how do you do that? Well, in our case, you diversify by picking different smartfolios. That's the easiest way to do that, because they are different. They might be correlated, but they're definitely different. They have different behaviors. And that is the best way to be able to achieve, hey, how do I, in the future, not go below 10% off of my all-time high? That's actually very, very important. And that's what a very wealthy person wants to do, because they already have enough money. They don't want to take a lot of risk. They don't want to ever be more than 10% off your high. And by the way, on Wall Street, if you're sitting as a PM on a desk, that was your getting fired number. You can't lose 10%. Best question. Dude, gotta pick a I'm gonna give it to the AI question.
All right.
We're gonna give it to AO French, I guess. Is that how it is?
Yeah.
I have to, because I spent the most time answering it, and it is my passion. So you get the benefit of my own passion today, even though I don't think those questions were totally, or even my answers were totally understood by other people on this podcast. And I'm not even sure I agree with all my answers, because again, I want to pursue more. It's just that business prohibits that. So that's the winner.
Perfect. Well, Adrian, the instructions are on the screen here. I believe you already have an account, so none of this should be an issue. But just send an email over to mailbag@iflipinvest.com. Either put your account number or send us a screenshot of your portfolio, or portfolios plural, that you're in, and then our team will respond to you with the way to get your gift card. So congratulations. Thank you for the handful of questions here, and I'm just going to make sure we're not missing any last minute ones before we sign off. I don't think there are any. Kelly, any parting thoughts?
No, I think 2 weeks from now, I think we'll be closer to the end of September. So it looks like that's on the 25th.
Yep, you got it.
That'll give us a better time. And if September holds true, we'll probably be lower. But this is, it's going to be, I can tell you this, it's already been a ride this month. So I'm expecting more of a ride up and down for the remainder of the month.
Yep. Well, perfect. Well, thank you guys for hopping on tonight. Adrian, congratulations on being the winner tonight, and have a great couple weeks, and we will see you guys back here on the 25th at the normal time.